So you can see what I'm trying to say is that um, on the weekly time frame, if you build, oh, I just made a mistake. Okay, corrected. So if you build a bias from the weekly time frame, if you build a bias from the weekly time frame, so let's say you build a bias from the weekly time frame, a weekly key level, right? So your bias was built on the weekly key level. This is another weekly key level that we have here, right? So what I'm trying to say is that if price if price gives to us this on a weekly, is a tap into a weekly key level, rejects and prices closes below. That is the first intel that we know that price is likely going to go down. The intel that now gives us more confidence to even short it to the downside is that the daily, right? This is the weekly rejection and weekly candle closures. The next thing we want to pay attention to is the daily. Now we want to see that the daily is going to give to us either a sweep and a break, or the daily is going to give to us a breakout. If the daily gives to us a breakout, it means that daily is in sync with our what? Our weekly. And finally, we just want to, because we want to look for entries, right? We can look for entries on the 4 hours too, right? And we must have to wait. And this is where patience comes in, because you would have to wait for 4 hours to also be in sync with the daily, right? Daily is already in sync with the weekly. Now you have to wait for 4 hours to give to you an entry confirmation that we are in sync with the daily and the weekly as well. So the 4 hours now, let's say, for example, the 4 hours gives to us um, a V-shaped key level that got disrespected, that is overlapping with an imbalance, right? And we start to sell, right? So let's say, for example, you took the sale from this V-shaped key level that got disrespected, that is overlapping with this imbalance, right? The next thing you want to see is that first thing first, ideally, you know that you want to take profit from the external range liquidity that is actually resting here, right? So price begins to run down, but let's just pay attention to what I'm saying. So price, don't forget, we came from a weekly key level, and the nearest key level, like I said, the same way a storyline or a buyer starts is the same way it's going to end. So let's say price starts from this weekly A-shaped key level, and this is a weekly V-shaped key level or an open close key level. You got an entry from the daily and the 4 hours, and price begins to run to the downside. And price trades into that your weekly key level that you are looking to. That is the nearest weekly key level that price is closest to, right? And let's say on that week, price trades into that weekly key level, reacts from it, and it closes above, right? Now, we ended our week with price trading from 1.1 key level on the weekly to the nearest key level on the weekly, right? And we see that the way we closed this particular week was that price tapped into this weekly key level and it closed above it, right? Now, price closing above it, like I always say, price reacting from a key level and closing above it is not enough. It is not enough to say that we want to go to the upside. We must move one time frame lower again from that weekly to the daily. We want to see a breakout, or we want to see a liquidity sweep and a break of structure, right? If we now close this week trading into a weekly key level, we reacted and closed above. We move one time frame lower to the daily time frame. We can't find a liquidity sweep and a break of structure, or we can't find a breakout, right? It means that the coming week, price is going to look for the nearest daily key level that price has created, and we are most likely going to continue to sell to the downside, right? The reason why we are going to continue to sell is that, number one, in line with the weekly time frame, the most recent break of structure or breakouts that we have, right, is to the downside on the daily, right? Until the daily gives to us a sweep and a break or a breakout, then we know that, okay, weekly wants to shift its directional bias from the weekly time frame, from selling to buying. Do you understand? But if the daily does not give to us a breakout, if it does not give to us a breakout, we know that these breakouts that we have, that it gave to us all of this sell, we know that the weekly is still bearish until we see a breakout on the daily, where daily is in line with the weekly. That is when we now know that, okay, yes, the bias has ended, the storyline has ended, bearish storyline has ended. Now we want to continue to buy. Do you understand? The same way it is in a weekly time frame is the same way it is on the daily. So that is why we say if we have a daily A-shaped key level, and we also have a daily V-shaped key level or the daily open close, right? Do you understand? So we have the daily A-shaped key level or the daily open close. So one of the things you now begin to understand is that if price trades, you know, first thing first, right? We have a reaction, then we have a candle closure, right? Which is not enough. So this is the daily. First intel we have is that daily tapped into a daily key level, close below it, first intel. Then we move one time frame lower to go to the 4 hours, right? And the moment we see that the 4 hours has given to us a breakout, right? So we have this breakout here. The moment 4 hours gives to us a breakout, we are now looking for entry. Let's say we are looking for entry on the 1 hour time frame. So don't forget you build your bias from the daily key level. You are paying attention to the nearest daily key level because we know that price could sell into that next daily key level and go in the opposite direction, right? So now let's say 4 hours gives to us a breakout and we move to the 1 hour time frame. And on the 1 hour time frame, we are seeing a liquidity sweep and a break of structure. So 4 hours gives to us a breakout, but the breakout on the 1 hour is a sweep and a break on the 1 hour. So let's say, for example, we now got an entry at the 1 hour time frame and we now started to sell, right? The most ideal place we want to see price react from is the nearest daily key level. So why? The bias, the storyline started from the daily, it must end on the daily, right? So let's say price trades from we had a daily rejecting daily, closing below, 4 hours give to us a breakout. This breakout on the 4 hours, on the 1 hour becomes a liquidity sweep and break of structure. We look for an entry on the 1 hour because now 1 hour and 4 hours are in sync with the daily. We look for an entry on the 1 hour time frame and we are expecting price to trade into the nearest daily key level, right? The moment price trades into the nearest daily key level, right? And we see that price has traded now. This is the nearest daily key level now. On the 1 hour time frame, we sold down. And by the end of the day, price traded into that daily key level and it started to reject and it closed above. Now, this candle closure, rejection and candle closure above that nearest this second daily key level, it is not enough to say that, oh, we want to start buying now. It is not enough to say we want to start buying. We have to see what happened, what sponsored this storyline to the downside must be what must sponsor this storyline to the upside in opposite direction, which means that now we have price has traded into a daily key level, right? It has rejected and it has closed above. We must see on the 4 hours. The 4 hours must give to us a breakout. The moment we see a breakout on the 4 hours, we know that now this sell has ended. We now want to join in this buy. We now begin to look for buying opportunities on the 1 hour or 30 minutes time frame, right? So you see that is the way storyline ends. The same way you can build bias on the 4 hours. So you have a 4 hours A-shaped key level, price traded into it, right? Rejected, close below. You move one time frame lower to the 1 hour or 30 minutes, and you're looking for confirmation entry, right? Let's say you have like an engulfing, right? And the nearest key level on the 4 hours is here. The moment you see price trade from that, your confirmation entry to the 4 hours, right? There's every tendency that sell that has happened, right? It has ended. The moment price trades into that 4 hour key level from your first entry, it means that there's every likelihood, 70 to 80% likelihood that the sell has ended, which means that we might be begin to see price trade into the opposite direction. Do you understand what I'm trying to say now? So I'm showing you how storyline starts and how storyline ends. So now, let's put this. So we have this on the daily, right? Is that clear? Is that clear? Is this? Sorry, hold on. Okay, let's continue. So is that clear? Are we beginning to understand how storyline starts, what you should look for? So what you would need, right, is patience. You would need patience. You would need extreme patience. I mean, patience to just wait. Don't sell because you want to see sell. Don't sell because don't just sell because you want to sell. You have to wait for the conditions to be met, right? And that is why I encourage documenting your thought process every trading day. You can get what we call these sticky notes. The sticky note, not the small one, no, the big one, the long one. There are two types of sticky notes. There's a sticky notes that has like the long one. There's the one with the small size, like a square shape. But there's the one that is very long. That sticky note should even help you more, right? To document your thought process. Oh, daily has reacted from the daily. 4 hours has given to us a rejection, right? 1 hour is also broken structure to the downside. So 4 hours, 1 hour are in line with the daily, right? You are now looking for entry from the 1 hour time frame, right? So the next thing is your nearest point of exit that will show that the storyline has ended on the daily is that you must pay attention to the next daily key level, right? That is where you want to see that bearish storyline has ended from. Do you understand? So it must help you to be able to document your thought process. Patience to wait for all of these things is enough. Just patience is what you need. So daily rejects daily, 4 hours gives to us a breakout, right? The moment we see the 4 hours giving to us this breakout, so daily has rejected daily, 4 hours has given to us a breakout, or so 4 hours has given to us a breakout, or it has given, and on the 1 hour time frame, that breakout we see on the 4 hours on the 1 hour time frame becomes a liquidity sweep and a break of structure, right? So 4 hours give to us a breakout after daily rejected daily, but 1 hour now give to us a liquidity sweep and a break of structure, right? So now let's talk about entries. So now, one of the things I made mention of it like last month, right? I made mention of it like last month. So you see 4 hours and 1 hour in sync with the daily. So now I made mention of something about gold last month. I made a mention of it in passing that go and study gold. So if it's only open close that break in one time lower time frame, can we don't fool you, I don't get your question. If it's only open close that break in the one time frame lower, can we still use it?
I mean, sir, I mean, if
Yes.
it's from 4 hours to 1 hour like this,
Yes.
just to move to 1 hour, if it's just only open close that break on that 1 hour, or from daily to 4 hours, if it's just open close that break on that 4 hour, can we use it?
Yes. Okay. That's a beautiful question. Let me answer that question. That's a very brilliant one. So now let's say this is where we begin to use the open close, using it as a break. Now, I love that question. So let's take this, please. I want everybody to pay attention so that we don't make mistakes. If we have this on the daily, this is a daily key level, right? Daily has rejected daily, right? Daily rejected daily, close below, right? We have the nearest 4 hour, the next daily key level that is resting here. So now let's say 4 hours gives to us a breakout. Breakout now. So it's breakout on the 4 hours. And when we move one time frame lower on the 1 hour, we are seeing a liquidity sweep and a break of structure, right? So we have a liquidity sweep, a break of structure. So we know that the 1 hour, the 4 hours are in line with the daily. So now let's say we took an entry to the downside and price begins to trade to the downside, and price traded to the next daily key level, right? I want to explain this question that Danfodi just asked. Now, price has traded to the next daily key level. The moment price trades into the next daily key level and it rejects on the daily and it closes above it as a body, and you move to the one time frame lower, let's say you move one time frame lower to the 4 hours, and you see that 4 hours has given to you a consecutive candle to the downside that created an open close, then we now see that engulfing. And please we don't want to go back. To choose the right key level, just go back to the videos on key level, you will understand it, right? So we know that the storyline is bearish, right? Daily rejected daily, close below, 4 hours give to us a breakout. And after 4 hours give to us a breakout, we swept liquidity break structure and we started to sell to the downside. Then price moved to the nearest daily key level, swept, traded into the next daily key level, rejected and closed above. When we move one time frame lower to the 4 hours, right? And for the 4 hours time frame, we see 2 consecutive candles to the downside that has created an open close. Now, price has broken above the open close and it has also engulfed. A break of an open close on the 4 hours, does not signify that a storyline has changed. It does not signify that a storyline has changed. Breaking of open close, it does not signify that a storyline has changed. It does not signify that the storyline has changed. Is there a possibility that price has broken this 4 hours open close and price can still use it? Yes, it can use it to give to you the retracement. Don't forget, the entire storyline is bearish. Price rejected from the daily. Now give to us a break of this open close on the 4 hours. It can just use it a little bit to come and reject on the daily, on that same open close, give to you the retracement. It will continue the bias, right? So price broke above an open close, price would most likely come back to it because that is a key level that got disrespected with an impulsive move to the upside. There's every possibility, 80% chance, that price will still come back to use that same open close for a retracement. And the moment it retraces, it will continue in that bearish bias. Now, the difference in what I'm saying is that it will be used for a retracement, not used for a change in direction, not used for a change in storyline. Yes. Yes. So a key level that has been respected, but got disrespected with an impulsive move, right, is going to be respected. So that is what I'm saying. The difference in what I'm saying is that if price has started a bearish storyline and trades into a daily key level, right, and it trades into that daily key level, rejects and closes above it, and we move one time frame lower. Now, on the 4 hours time frame, we are seeing two consecutive candles to the downside that has created an open close. Price now broke above it with an impulsive move, closed above it as an impulsive move. We can use that 4-hour key level for the retracement. That open close that got disrespected can be used for the retracement, but we cannot consider this the thing that happened for a change in direction. If we use it for the retracement, right, it will most likely trade to the nearest 4 daily key level again that has been created, then it will continue its bearish bias. But the only time we're going to consider that, the only time we can consider that the daily is willing to change its directional bias is when we see that price has broken out. We want to see a breakout on the 4 hours. We want to see a breakout on the 4 hours. A break of open close can be used for retracement on the 4 hours, but it cannot be considered as a use for a shift in directional bias. Do you understand what I'm saying now? Is that clear? Do you understand? I'm not saying it won't hold. So daily traded from a daily key level, the directional bias, the storyline started here and it ended here, right? If it ended here and we still have the same condition, right, that happened here, we're having it here. What that condition is that price tapped into the key level, rejected and closed above. We move one time frame lower. For us to consider a change in storyline, we must see the same conditions met, a breakout on the 4 hours and a liquidity sweep and break of structure on the 1 hour. If the only thing we have when price trades from this particular key level down here is that on the 4 hours, we now see two consecutive down candles to the downside that created an open close. Price disrespected it with an impulsive move. That same open close on the 4 hours will be used. It is going to be respected, but we can only use it for retracement in that bearish order flow. We are not using it to change directional bias. So you will see that we can have that retracement, price will trade into in another daily key level, then we'll have the continuation to the downside. Do you understand? So that is why you see that even if on the weekly time frame, you know that we are going to be selling all through that week. Okay. So let me finish this, what I'm saying. Dixon left a note. So if you see on the weekly time frame, right, we know that we are going to be bearish. We most likely will not see Monday, Tuesday, and Wednesday to Friday just keep selling, 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 selling. No, we can have Monday to Tuesday give to us a sell. Wednesday can give to us that reversal. Then Thursday and Friday can continue the sell. Do you understand? So let's see this. Sorry, sir. But personally, if I enter a trade on the 30 minutes and I have a key level on the daily that I expect price to get to, I simply use continuations until I get to that daily point. Yes. Yes, now it's the same thing we are saying. It is the same thing we are saying. We're about to talk about entries because we're dealing with storylines. Okay, so we don't need to look for engulfing for confirmation of storylines unless it was engulfing that started the previous storyline. See, don't confuse yourself. When you go back to our recorded videos on entry confirmation, we spoke about how we can use entry confirmation, we can use engulfing for entry confirmation. Do you understand? You can use we never spoke about I'm not sure we ever spoke about engulfing as using it to build storylines, except times where we spoke about weekly rejecting, weekly closing below, right? We move one time frame lower to the daily, and daily now gives to us an engulfing, right? The moment daily gives to us an engulfing, like I always say, we move one time frame below from the daily. Daily gives to us an engulfing, right? Daily gives to us an engulfing. But on the 4 hours, we must see that 4 hours must give to us a breakout, or the 4 hours must give to us a sweep and a break, right? So you can see that is the context behind engulfing. Then another time we spoke about using engulfing as entry confirmation. right? So, but the question that Danfodio is asking is that if price has started trading from a daily key level, and let's say price traded from this daily key level and it traded to this daily key level, right? We cannot use an engulfing to validate that the direction has changed. But we can also use that same engulfing to catch a retracement. That is why in a bearish order flow, we can still catch buying opportunities. Even when 4 hours has given to us an engulfing, we can use it to catch buying opportunities. We cannot use it to determine that price is ready and willing to change direction. That is the difference. That is the difference. Do you understand? The BOS, the break of structure on the fourth, the break of structure on the 4 hour, must it be on the previous day candle, or you can use it on the break of structure can happen that same day, can happen the next day. Anyone is fine. It's not about previous day or current day. Just focus on what price is telling you right now. If daily rejects daily today and the 4 hours break happens the next day, focus on the current price action. Do you understand? It's as simple as that, right? So I want to reiterate again. If you go back to bias and entry models that we spoke about, I told us that if the weekly rejects from a weekly key level and closes below, we must move one time frame lower. Sometimes one time frame lower, daily can give to you a breakout. Daily can also give to you an engulfing, right? Or daily can give to you a liquidity sweep and a break of structure. It was then we spoke about engulfing on the daily. And I told us when you have an engulfing on the daily like this, move one time frame lower to the 4 hours. The 4 hours, this engulfing on the 4 hours could either mean a breakout or it could mean a sweep and a break. All we just want to see happen is that the 4 hours and the daily are in sync with the weekly time frame, right? The time we mention of engulfing on building when we started talking about storyline, we spoke about it from the weekly down to the daily, down to the 4 hours. Then we now spoke about engulfing as a confirmation entry, right? Now that we are talking about entries and storyline and confirmation, storylines and entries combined, I said to us that if you pick a storyline that starts from the daily and you are looking to the next daily key level for price to trade into, right? If price has started the order flow to the downside, if price has started the order flow to the downside and it gets to a daily key level, right? And that daily key level begins to reject, and after it rejects, it closes above. This order flow is still to the downside. What we validate that this order flow has changed from bearish to bullish is not by an engulfing. You can't use an engulfing to validate. What I mean by engulfing is that when I'm talking about engulfing now, the part of it I'm talking about is price has created 2 consecutive down candles, has created for us an open close, which is a key level. Now price has disrespected it and closed above. This cannot be used to verify that price now has shifted its trend from bearish order flow to bullish order flow. No. What I'm saying is that this open close that was created by these 2 consecutive down candles can be used as a retracement, but cannot be used. We can't consider it as a change in directional bias. So you will see that on the 4 hours time frame, now the storyline started here and it ended here on the daily. We move one time frame lower to the 4 hours. We saw 2 consecutive down candles to the downside, created an open close. Price disrespected it to the upside, closed above it with an impulsive move. We can use it as a retracement. You can catch the retracement, right? When you catch the retracement, the order flow is still to the downside. When you catch the retracement, price is most likely going to trade to a daily key level again. Then we will continue the bearish order flow. But until we see 4 hour give to us a breakout, until we see 4 hour give to us a breakout or a liquidity sweep and a break of structure, right? That order flow is still to the downside. Every other thing that is happening is a retracement. Do you understand? Do we understand now? Danfodio, do you understand what the question you asked?
Absolutely, I get it, sir.
Good, good. So let's now talk about, let's combine the both of them together, right? So let's say, for example, this is the daily time frame that we picked the key level from, right? I was also going to, I would also add that part of what Dixon was speaking about, the continuation, right? So we've spoken one time about origin. We've spoken one time about origin and continuation setups, right? So if on the daily, oh boy, we might have to use another link again. We have 10 minutes more to go, right? So daily rejects daily, close below. We move one time frame lower. This guy. So daily rejects daily, close below. We move one time frame lower to the 4 hours. And on the 4 hours, you are seeing a liquidity sweep break of structure, or you see what we call a breakout. So we know that our 4 hours is in sync with the daily. Do you understand what I'm saying? Then we move one time frame lower and we are seeing, so now the one time frame lower is the 1 hour. So let's say daily rejects daily, close below, 4 hours give to us liquidity sweep break, or it gives to us a breakout, right? Now, if it gives to us a breakout, that breakout on the 4 hours is what we see on the 1 hour time frame. We're going to see on the 1 hour time frame is going to be for us a liquidity sweep and a break of structure. So we now begin to, if you pay attention to the entire story that is being told, we now began to speak about the first entry was the origin, right? We began to talk about origin of a setup. So we have, okay, let's just simplify everything. So the origin of the entire setup. So now your 1 hour, 4 hours is in sync with your daily. 1 hour is giving to us a sweep and a break, right? We have this sweep and a break. Two things can happen on the 1 hour, right? I'm speaking in respect to the majors like USD CHF, GU, gold. Now, if you pay attention to the entire structure that is happening here on the 1 hour, 1 hour swept liquidity and broken structure, there is every possibility. See, let's deal with this one first. There's every possibility that on the 1 hour time frame, this A-shaped key level, which is your QMR, don't forget, on the 1 hour time frame, we have two major key levels that price is most likely going to come to play, because this is the origin of the entire setup. So we have this major key level. This is a QM, right? We also, which is a V-shaped key level that got disrespected. Then we have this A-shaped key level, which is the extreme. So we now begin to stand between which one should I play, which one should I not play. Now, the story, the candle is going to tell you the story. Now, if, for example, you have this QM that you have here is a V-shaped key level that got disrespected twice, right? That doesn't mean that price is going to come back to it and play it. Price might come back, play the extreme, which is the A-shaped key level, and continue to move to the downside. But when you pay attention to what is happening here, right, that is why I encourage, look for key levels that was tested at least once or twice, that held, then they got disrespected. So let's say, for example, this QM key level was tested once. This A-shaped key level, which is the QM, right? It was tested once, it sold, tested again, sold. Before we had the breakout, we had that, before we now had the sweep and the break of structure. There is every possible, now it leaves us with the 80% chance that price is not coming back to this extreme anymore. Price is going to come to that QM. And the reason why we want to play the QM is because this is an A-shaped key level that was tested twice, right? After it was tested twice, its price now broke above it with an impulsive mode, leading to us a sweep. Then we had a break. So price is coming back to that same key level to sell. Are you getting the logic behind what I'm saying now? Right? Are you getting the logic? Are you getting the logic of what I'm saying? So this is what I'm trying to show to you. Which is the best? Which one is it? Okay. Okay, this one's okay. It's not like the perfect, but it's not the perfect example. But look at this. Look at this. What can you find here? This is an A-shaped key level, right? A V-shaped key level. What did you notice? So when price broke out, this is the 1 hour time frame. We had a sweep, we had a breakout, we had a sweep and a break of structure. So what did you notice that price did here, right? We would have been paying attention to, this is an A-shaped key level that it has already been tested already. You can see it gave to us that drop. But now we have this A-shaped key level where we have another key level that is here as well. We have this particular open close. Now that we have this particular open close, we are maybe most likely waiting for price to just, give to us that, deep retracement to this open close that begin to sell. But when you now begin to pay attention to price, you will see that before this impulsive move that broke structure to the downside, pay attention to what happened here. We also have this QM that could be standing here, right? So we now want to pick the best place to play from. This is a V-shaped key level. When you move to the line chart, you can see the V-shaped key level, right? So what did you notice that price did here? Price tapped into it, respected it. We bought, it even closed above. It would have because when you look to the left, you can see the entire order flows to the upside, right? So it was showing signs that we are still going to the upside. So tapped into this V-shaped key level, it bought, closed above, only for one candle to disrespect it and close with an impulsive move to the downside, right? So the story now lies between this area here. We had this impulsive move. We have this V-shaped key level that was tested once. Price disrespected it. So what did price do? Price came back. If you were waiting for a deep retracement here, you will not be tagged. Those that were even waiting here were not even tagged. But let's move to the 30 minutes time frame. Let's see if we had an opportunity. Okay, beautiful. If we refine to the 30 minutes time frame, can you see what happened here? Are you seeing what happened? Why did price not come back to this A-shaped key level that is resting here? Why did price not come back to this open close that is resting here? It leaves us with context, right? We are combining storyline and entries. It leaves us with context to it that look at this. This is a V-shaped key level that was tested here. It even made a lot of sense because 2 consecutive candles to the downside created an open close. Then we had an engulfing, created a V-shape. It was tested here once. It was even respected, closed above it. The next candle started to buy. But the next 2 candles began to sell. The story is not even here. This is the major story point. This candle that broke below it, right, with an impulsive move to the downside, right, and it closed below it as a body. So we know that this A-shaped key level price is most likely not coming there. Price is most likely not coming to this open close. Look at where price came back to. Price came back to this V-shaped key level that was tested once, then price disrespected with a close, with an impulsive move, right? If you now want to add context, you can use this one as your what? Internal range liquidity. So it satisfies the 2 conditions that what price is looking to do 2 things: attack liquidity, rebalance and hold imbalance. And we ask ourselves a question: if price wants to come to rebalance and hold imbalance, at what pricing level? This is the pricing level. Why? A V-shaped key level that was tested once, that price now disrespected, right? So just give me a minute. Okay, are we still together? Can we hear me? I need to confirm if you can hear me clearly.
Yeah.
Okay. So what we are going to do is that I'll share another link, right? Let's have one more link. It's like we're going to use the entire day today, right? We must use the entire day. So let me share another link. We have less than 60 seconds left. If you're not too tired, you can join us, right? So I'm going to share the next link right now.